Want to buy an apartment with your earnings? Don't worry. Your solution has been found by watching this video. Learn about Robert Kiyosaki's real estate investment scheme, which will not only help you acquire the desired property, but will also be profitable for investment. By obtaining passive income, you will be on the path to accumulating wealth. Sign up quickly and discover the secrets of the finance world with us. The main essence of Kiyosaki's approach to real estate investments is to buy properties, borrow money from the bank, and rent them out for an amount that covers the monthly loan payments and additional expenses. With this, you will create a cash flow that will eventually pay off the property. Investing in real estate offers 4 sources of income: rental income, depreciation, property value appreciation, and tax advantages. However, this approach is risky due to the instability of economic conditions and global complexities such as fluctuations in exchange rates and uncertainty regarding national currencies. Evaluate the risks carefully and adopt Kiyosaki's strategy wisely to increase your chances of financial success. Robert Kiyosaki started from scratch with a capital of $300. Today, one might wonder how he managed to earn over $100 million from real estate. The secret of his success lies in the formula he invented and implemented, allowing him to make money from real estate by investing minimal amounts. There are various ways to purchase an apartment in a new building today, such as mortgage installment plans, borrowing funds from the bank, and the 100% payment method Kiyosaki devised. The safest route is acquiring residential or commercial properties with full credit. This provides the opportunity to purchase an apartment from a developer as if it were free and gain returns from such investments. To obtain a mortgage loan in our countries, you typically need a certain initial amount. In this case, the profitability of credit investments is limited. Rental properties essentially turn into margin trading, i.e., leveraged trading, resulting in lower returns than if invested with your own funds. However, today, some financial institutions offer mortgage loans in the absence of initial capital. Thus, it's possible to implement the Kiyosaki method even without initial capital. It's worth noting that annually, the interest from such a transaction is sufficient, a high equivalent before I reveal the Kiyosaki diagram in a specific example. I'd like to remind you that if you want to see even more videos on our channel, be sure to support this video with a like. So, an example of the diagram itself. The object price is $140,000, registration costs $10,000, down payments $40,000, equivalent costs $50,000 credits. The loan term is 100,000, 100 months, and a loan rate of 1% per month. When dealing with loan payments, it's important to divide the total loan debt by the agreed term. This way, we obtain an estimate of how much we need to pay per month to settle the loan within the agreed term. Additionally, it's crucial to consider the interest on the loan. By multiplying the interest rate by the loan amount, we can calculate how much we are paying in interest each month. Therefore, by adding the principal payment to the interest payment, we arrive at the total amount we need to pay monthly. There are also taxes in this scheme, public services and other expenses amounting to $500. Conventional rental monetary income yields $3,000, and also the net profit, deducting the loan payment and public service costs, and we obtain $1,500 in profit. After spending $50,000, we acquire an object worth $140,000 and a permanent income source of $500 per month. Although 1% seems small, when considering loans of $2,000 per month, the actual income would be $2,500 divided by the total cost of $150,000, resulting in approximately 1.7% per month. We choose to buy 3 of these objects on credit, generating a return of 2% per month. It is crucial to filter market offers and focus on what really matters. In the real estate sector, investing in office, retail, and warehouse space may be more advantageous. We will discuss more about this in future videos. If you're interested in knowing what the best real estate investment is, leave your comments. It is possible to improve the final return by adjusting the object's price, loan rates, and terms. For example, by refinancing, we could increase our monthly income to $4,000 net. To succeed in this scheme, it is essential to have an impeccable credit history and understand the principles of the banking system. With the courage to take calculated risks, real estate investment can become a stable source of long-term wealth. What do you think about this topic? Please tell us below this video. Don't forget to subscribe on our channel and like this video to receive more content like this. Thank you for watching, and until next time.